All right, wondering what stocks to buy in the new year, so grab some paper and a pencil, maybe your iPad. Every night this week, we're going to feature a special market monitor to talk about stock picks for 2014. We now begin with Charlie Bobrinskoy. He's vice chairman of Ariel Investments and portfolio manager of the Ariel Focus Funds, up 36% this year. Nice work, Charlie. Congratulations.
Thank you very much. We did have a very good year.
Good for you. You just heard, I assume, Mario Gabelli say he expects earnings to be higher next year, but interest rates too. There may be more volatility, but he thinks that is going to bring more opportunity. How do you see that comment, and what do you see for 2014?
Yeah, I was sort of irritated that you played him first because he said exactly what I was going to say. So we do have some wonderful tailwinds behind us here. We think 4 big tailwinds: energy, housing, auto. All 3 of those industries are going to be stronger, and they're going to put a lot of people to work at good, better paying jobs. And then the 4th tailwind is that Europe is going to go from being a headwind to a tailwind. It's coming off the bottom, and it's going to start being better. So those are the big things we got going for us. The one thing that we've got in our face, the headwind, is rising interest rates. And we think that is almost a certainty, and it is hard to predict how stocks are going to react to that. So we think things are probably going to be going up, but it's going to be windy out there.
You didn't mention, Charlie, anything about technology, and yet the first stock on your list of picks for 2014 is IBM, and this is a stock that didn't do so well this past year.
Yeah, one of the reasons why we did have a good year this year is we try to find things that are out of favor. And right now, large cap value tech is out of favor. So IBM is one of the few stocks that didn't do very well this year. It's trading at a very low price-earnings ratio of less than 10. It's going to be benefiting from the recovery in Europe and from a strong economy. And frankly, people are just too negative right now on IBM.
Charlie, let's go to your second choice, which is Western Union. Charlie, have you heard of this thing, email, Charlie?
Yeah, try and send an email with cash across the Mexican borders. They have tightened up those restrictions, the anti-money laundering restrictions. It is a lot tougher than you think. And try sending that email if the person on the other end doesn't have a bank account. You can't do it. And so the money transfer business is growing. It's been growing steadily for hundreds of years, and we think it's going to keep growing.
You have another tech stock on your list. This is Oracle, a very controversial stock. Everybody debates about this, and the CEO, Larry Ellison. Why do you like it?
Well, again, it's because everybody hates it. I don't know what this guy did, but boy, everybody hates Larry Ellison, and he's been awfully successful. His software is embedded within large companies. There are huge switching costs, and yet the stock is trading for about 11.5, 12 times earnings. That compares to an average stock of about 15 times earnings. It's going to benefit from a recovery in Europe. There's no doubt that tech spending has been soft as the economy has been a little bit soft around the world, but we think they're going to grow. And frankly, they're getting to the cloud better. They had a problem with their products not being available in the cloud, and they've figured that out.
Let's talk about a couple of things that you hate. Name a couple for 2014.
Well, I do think the bond market is still scary, and you've had me on a couple of times, and I think in the past I've said, go home, find all your bonds, and sell them. Already some of that pain's been taken, but interest rates are going to go up and bonds are going to come down. And we think municipal bonds are particularly scary. I think Puerto Rico is going to have some big trouble. It's going to come to a head this year. The state of Illinois, the city of Chicago, where I live, have still got big problems. So if we get a couple of large municipal defaults, the municipal bond market is going to be hit hard. And then we're also nervous about the high yield market, which seems to go through 5-year swings, and it's back to being overvalued.
Charlie, great advice. Thank you very much. Appreciate it. Have a happy new year.
Thanks for having me.
Charlie Bobrinskoy of Ariel Investments.